Hey, Morgan, so at least for the quarter, it was a healthy beat here on EPS and revenue for Amazon. That EPS number coming in at $1.86. That was better than expected by almost 40 cents. Revenue of $187.79 billion, stronger than expected. And then that AWS revenue number, that cloud sector, 19% growth. That was the number the street was looking for. So right in line there. We're going to keep digging through the numbers, though. We'll bring you more. You can see stock down more than 5%. So something's got to be going on here. We'll find out.
All right, Kate, we know you're getting back to work on that. We do also have Expedia results. We're going through those, too. In the meantime, Mike, I want to bring you into this conversation, your reaction to the beat we just got in the top and bottom lines for Amazon and the fact that cloud did come in as expected, 19% growth after we saw Alphabet fall short and Microsoft's results disappointing as well.
Yeah, I mean, I think it probably says a combination of the challenging setup in terms of the buy side having pretty big eyes for, let's say, revenue beats and what AWS was going to deliver, and then maybe a little something in the mix in terms of guidance, which I wanted to take a quick look at. But it has really been the favorite in the Internet group in terms of how the stock has performed, in terms of consensus on the sell side and the buy side. So let's see it settle out and if this is just sort of the reflex reaction.
Okay, Barbara, you're a shareholder. Your clients are shareholders in Amazon. I realize we're looking for some more details here. What do you want to hear from this company?
Well, there are a number of things. I mean, obviously, the AWS is what's being closely watched because of Microsoft and Alphabet's miss there, because it's really been driving a lot of their growth and also the AI monetization. We want to know about the e-commerce margins, what's happened both in sales and in the margins there, particularly what's happening in their distribution and wholesale. They are really doing some big improvements in automation and robotics, and we want to hear what that's doing to margin. So I think there's a number of levers that we want to see, and it's surprising because they really beat on the EPS number, and so this sell-off, it may be short-lived, because their revenues were not dramatically higher, but they were higher. So it looks like very good numbers.
It looks like, if I'm reading this correctly, that Q1 sales are projected to be $151 to $155.5 billion, which is softer than consensus expectations right now. And Kate Rooney has more details on that and other things in this report. Kate.
Hey, Morgan, so the guidance here, at least for Q1, appears to be weighing on Amazon after hours. So Q1 revenue looking below consensus at the midpoint, $151 billion to $155.5. Street was at $158, so significantly lower. And then same with Q1 operating income. That's looking lower than expected, or at least where the street was. There is a note in here, guys, about foreign exchange. They say net sales are expected to be $151 billion, between $155, as I mentioned, growing between 5% and 9% compared with the first quarter. They say here the guidance does anticipate an unusually large unfavorable impact of approximately $2.1 billion from foreign exchange rates. And as a reminder, they say there was a leap year in the quarter. So there's a little bit of messiness on the comparisons, but that is likely what's causing that knee-jerk reaction.